Well, Bitcoin broke its ATH, reaching over $108,000, and this was all made possible thanks to the massive adoption of cryptos that has been taking place since 2024. It was an incredible start to the year with the rollout of spot ETFs on Bitcoin and Ethereum. Trump's election provided a clear view of the future of cryptos with a pro-blockchain government and a strong desire to boost the adoption of cryptocurrencies. We've already seen a lot of altcoins launch their alt season and make impressive gains. And remember that on our millennium.fr copy trading platform, you are given positions that were just incredible. ADA, given at 30 cents and has already multiplied by 4 since the position was triggered last August 5th. There's also Protocol, given at 0.026 and has already gained 119%. Or even ZRX, given at 25 cents and has already increased by 226%. To keep track of all our positions, many of you have signed up on the platform to take advantage of all these trades representing the cryptos where Trade Ventures invests. The link is in the description if you wish to sign up. But the best is yet to come. The cycle we're currently in is unlike any before, and will undoubtedly be the strongest cycle we've ever seen in the crypto world. In this video, I will reveal the plan we will follow to achieve massive gains in the year 2025 before the next bear market. Because yes, a bear market is already taking shape, and it's now that we need to take the best positions possible. We are going to look at exclusive data from our page to gain a considerable advantage on the market. By analyzing current financial flows, the most effective narratives, and the upcoming top-performing cryptos. But that's not all. Taking the best positions serves no purpose if you don't follow a clear exit strategy and take your profits. I have literally seen dozens of people not sell anything and watch their portfolio return to zero compared to the gains. And as a professional, that won't happen to us. I'm a licensed financial advisor in France within the company Trade Ventures. Fully invested in the crypto economy since 2017, we offer our clients and subscribers a clear vision of the market and the best assets to invest in for maximum return on investment, whether we're in a bull or bear market. We start with the rotation of assets and financial flows. I'm sure you all must have already seen this chart of the traditional phases of asset rotation before entering the alt season. It all begins with the Bitcoin pump, followed by Ethereum, then the large caps, and finally the pump of the small caps. We first saw Bitcoin pumping, of course, but it seems that phases 2 and 3 now form a single phase. Indeed, if we look at the ETH charts and large caps like Solana, XRP or ADA for example, we notice that the large caps are significantly outperforming ETH and haven't patiently waited their turn. This can be explained by the crucial change happening in this cycle, the arrival of institutional investors. The institutions are arriving, but their mindset remains the same as in the traditional market. Investing in projects that make money or are highly likely to make money. That's why we've seen a number of cryptos pumping before ETH, like AAVE, Solana and others. To make significant gains, you have to make the right choices. What narrative should I choose? Which crypto in this narrative should I pick to hope for the most possible gains? To answer this question, we'll analyze some crucial data. We'll meet on the Trade Ventures dashboard on Dune Analytics and see the following 3 boxes that compare the strength of different narratives with each other over 3 time units. We have the 7-day time unit, the 3-month one, and the 1-year one. If we look at the narratives that have performed the best over the last 7 days, we have the AI narrative, which finally seems to be waking up, following the meme coins. DeFi and gaming are also the narratives currently outperforming the average. If we look over a larger time frame, say 3 months, we see that the big winners were the meme coins and DeFi narratives, which skyrocketed. What will be interesting to do is to identify the narratives that remain in the top 5 and show enough strength to stay there. Here, we have only the meme coin narrative achieving this feat. As for DeFi, we see it dropping from the 3rd position to the 11th position since the beginning of the year, which may indicate an initial rotation of assets between narratives. So we will choose the narratives that are on the rise like AI, DeFi and Layer 1. Personally, I don't recommend anyone to buy meme coins, but everyone can do what they wish to diversify their portfolio. Once the narrative is chosen, it's important to implement the same strategy and follow the strongest cryptos in the narrative compared to others, regardless of their market cap. For the Layer 1 narrative, for example, we can clearly see that the altcoins that dominate the most are ADA, Injective Protocol, and SUI. In the short and medium term, these are the 3 Layer 1 cryptos that perform the best despite their large market cap. For AI, the data clearly highlights FET and Render. Besides these, in the top of the strongest cryptos, we see that at the level of trading volumes on decentralized exchanges, there's a significant concentration of the AI narrative currently between FET and Render, indicating that these 2 cryptos are currently waking up for a future rise. Finally, if we consider the real-world assets narrative, we see that for serious projects, it's the cryptos Ondo, TRU, and MKR that are absorbing the strongest increases. In terms of trading on DEX, we clearly see that MKR absorbs a huge portion of the trading volumes. A little disclaimer about Hondo, I personally advise you not to buy any at the moment due to the massive token release happening on January 18th. We'll have $3 billion worth of tokens unlocked, while Hondo's current market cap is $2.2 billion. That's clearly not great for Hondo, so wait and see what happens by the end of January before purchasing any. On our dashboard, we have all the data you'll need to understand what's happening in the markets to make informed decisions. That includes daily ETF flows, daily performance of narratives, the strongest cryptos of each narrative, the times of the year when it's better to buy or sell these cryptos. You'll find all the info you need to make the right investments, and they're updated every day. To do this, just click the link in the description to join our community on millennium.fr. On Millennium, you'll have access to all our positions and the assets we buy. We'll send you an email with an invitation to access Atri Adventure's private dashboard. Okay, that being said, picking the right narratives and the right cryptos is a good start. But all of this is useless if you don't sell smartly to take profits. You hear a lot of things on YouTube, like how it's better to sell in steps, keep what's called a moonbag just in case, and so on. I'll give you the exit strategy I've been using for years, which has provided higher returns than other strategies explained on social networks. This strategy is based on timing. You might have heard the adage, buy when it snows, sell when it goes, or the famous sell in May and run away. Several studies have been conducted, and they highlight an undeniable fact. The period from November to April is most often a time when risk assets rise substantially, while the months from May to October are when risk assets perform the least and lead to severe corrections. These corrections most often occur between April and May. We will look in a future video at the macroeconomic elements that influence this seasonality, but we can clearly see that the market is not wrong. On Bitcoin and alts, if we take the weekly Nasdaq chart, it's clear that for most years it's during the April and May period that corrections have occurred. I am not taking into account the year 2020, during which the COVID pandemic caused significant irregularities that skewed the market. The goal is to look at the data available to us in so-called normal years when there are no massive financial crashes or global pandemics. On the Bitcoin chart, it's the same. We are still in weekly, and we can see that April-May periods have almost always led to massive corrections. 32% last spring and 62% in 2022. If we want to get as close to 2025 in terms of macroeconomics, financial cycle, etc., we must look at the last bull run of 2021, during which we had a massive correction of 52% in 1 week. Just because we're in a bull run doesn't mean there won't be a correction. On the contrary, it's when there's full euphoria that the correction will be most violent, and if alt season starts as we think this winter, this scenario could very well repeat itself. If the bull scenario unfolds, with Bitcoin reaching the $150,000 zone by next spring, a massive correction like in 2021 would bring Bitcoin back into these two major imbalance zones, around $75,000, before a cycle end peak in November 2025. When we have this data in hand and look at what happened in previous cycles, we clearly see that this occurrence was the same for all cryptos, and that, no matter the narratives, whether it's layer 1 cryptos, DeFi, gaming, or others, they all peaked around April before a deep retracement, followed by a new ATH in November before the bear market. Therefore, I personally favor an approach based on the timeliness of cycles, coupled with massive divergences on the two key indicators, volume and RSI. I won't sell or set a stop loss unless three conditions are met. Condition number 1, we are at least mid-March. Condition number 2, we have a weekly RSI price divergence. Condition number 3, we have a price volume divergence, all in weekly. Let's take the example of Bitcoin to illustrate this principle. We are on the weekly chart of Bitcoin, and we see that the three conditions were met the week of March 8, 2021. We were at least in mid-March, and we had two additional things. First, a huge RSI divergence began to deepen despite a rising price. Secondly, a volume that had been declining for a few weeks, indicating that the trending movement was starting to tire out. Once these three conditions were met, I set a very tight stop loss below the weekly candle that led to the divergence. The three conditions occurred the week of March 29th, 2021. I place my stop below the low of the bullish weekly candle and move my stop up each time I have a bullish week. Here, then here, here, and here. My stop will finally be triggered here. Solana 2021. The triple pattern triggers the week of May 10,
Stop loss placed below the bullish candle here. Triggered during the massive correction the following week. Uniswap 2021.
Triple pattern triggered the week of April 12th. Stop loss moved up to the lot of the week of April 26th and triggered 3 weeks later during the big correction.
Nia, we were exiting here. Mana, we were exiting here. Sound, we were exiting here. And ADA, we were exiting there. This triple pattern triggered everywhere, every time, with an exit not only near the top, but also close to the big correction. It's a very beneficial psychological point, because it's mentally tough to sell your cryptos and wait several weeks for the market correction, without breaking and buying other cryptos at a higher price, and then facing the correction full force. As for the exit strategy for the mid-cycle correction, we're good, and I will give you several cryptos that, in my opinion, could reach
1.7 or 1.10 by next May. CRV, a DEX world with all the potential to achieve a X10 from now. FIT, an AI universe which in my humble opinion will do at least a X7 from now. TAO, also an AI world which will do a minimum X7 from now. ZDX, I expect a new top at $4 which is a X9 from the current price. Comp, which I expect at least at 7.65, a X10 from now. COTI, which I expect at 76 cents, a X7 from now. However, there are several top tier cryptos that I will no longer buy, preferring other altcoins with much more potential from the same narrative. I will make a video on this subject next week explaining why you shouldn't buy them anymore, so subscribe not to miss it. For the rest of the cycle, if everything goes as we want to explain, the strategy will change to anticipate a possible start of the bear market without a new top at the end of the year. Therefore, we will follow a strategy primarily focused on Bitcoin, which is relatively simple to minimize our risk as much as possible. In financial analysis, two price zones must be considered to take long or short positions. To start, we draw a Fibonacci from the bottom of the last impulse move to the top, with the 0.5 area representing half of the move. The lower area is called the discount zone. This means that the discount area represents a zone where the asset's price is no longer overvalued and is good to buy. The high zone, on the other hand, is considered a so-called premium zone where the price is too high to be bought. Long traders will thus tend to wait for a discounted price, while short sellers will wait for a premium price to short the asset. The strategy will be to wait for the BTC price to return to the discount zone with at least a daily consolidation area to buy Bitcoin. Regarding the price, you should anticipate a potential start of a bear market without a new peak. Invest only a maximum of 50% of your portfolio if you can't do DCA in case of a price drop. If you can do DCA due to weekly or monthly income, you can enter a position on Bitcoin with 100% of your portfolio. For beginners, DCA stands for dollar cost average in English, and it's a strategy that involves buying an asset each time the price drops. So you have a multitude of purchases over time. But since these purchases are made each time at a lower price, your average purchase price also decreases. It's a simple and extremely effective strategy. However, its implementation is complicated because it requires constantly having funds to deposit. With this strategy, in 2021, the risk was 100% managed. We bought Bitcoin at $30,000 with the possibility of DCA in case of the start of a bear market. If Bitcoin had directly entered a bear market and had bottomed at $16,000, we could have DCA'd with a retracement of less than 50% with the bullish explosion that followed. We would therefore have been winners in the long term. As Bitcoin rose again, we followed the same triple pattern strategy described earlier in the video. Our stop loss was triggered at $62,000, achieving 100% on the second part of the year. We'll do the same in this cycle to optimally manage our risk against an inevitable bear market that looms ahead. This was iTrade. Have a good day. Goodbye.